Hi everybody, this is Ospreyeye from mychartcoach.com, and in this video we're going to take a look at some more of the stocks that were in play today. Okay, so first up is TRXC. This is one of the big winners today. It did close up 92%. It is at overbought levels on RSI and Fasto. There was a bullish crossover here on ADX, and so today check out the candle that formed. It was a spinning top. Notice that you've got the super long lower wick, and then you've got a pretty, a nice size upper wick as well. And the real candle body is very small, almost a doji. And so what this shows that even though the bears drove the price down to low of day, and the bulls had the price above $3, the share price closed pretty much where it opened today. So it didn't really go far, even though there was a lot of movement throughout the day. And so the big thing now is it going to push higher, or is it going to work its way back into the bands? If it does work its way back into the bands, the first support levels down here at EMA 4 at 208. It is breaking out on the daily chart on a huge volume spike, and so there are bullish crossovers here on ADX or MACD on both time frames. And so what we need to do is look at the weekly chart to find the next key resistance levels. And so if you look here with TRXC making 52-week high levels this week, you could see and each candle on this chart represents 1 week of trading. You could see this week's candle is hitting the red and blue lines, which is the 200-day simple moving average at 3 and the 300-day simple moving average at 320. And so it's going to need to close above both of those levels for the week. This candle will not set until Friday for the share price to head higher. They need to turn into support. If they turn into resistance, you could see the share price pull back, and you've got EMA 4 way down here at 197, and then you've got the gap between low of week this week and high of week from last week. So with the big open, even though it did drop down, it has not filled the gap, and so that would be set up for a gap fill if the 200 and 300 week moving averages turn into resistance. The key level to hold would be the 100-week moving average at 170. That's the gold line. If it closes above 320, you've got the big level is up here at the high close from April of 2016, and that's up here around $5.30, $5.40. And so that's the upside potential if it can turn in the 300-day simple moving average into support. Okay, so yeah, like I said, huge volume this week. If you take a look at the 15-minute chart for TRXC, you could see it formed an ascending triangle pattern during the trading day, and this is just a 2-day chart. And notice ascending support. This candle here at 2:30 broke above horizontal resistance, and then that signaled more upside potential. And so the share price kept running higher. It did close just below EMA 4. It's holding EMA 8. The big thing is this green ascending support line that held all day today. So if it drops below that, that's going to signal downside risk. 260 is the big level to hold. If it breaks below 260, that's going to signal a potential consolidation. You could see a drop all the way down here to the 50 simple moving average, which is down at 206. To the upside, it needs to break above this closing price at 330. Around 295 or so. If it can keep this, the key is to keep pushing higher and making new highs. So once again, it's at a flex point. It has to break above resistance to head higher. Okay, let's take a look at LINU. This closed in the bull zone on RSI, so it's at 59. It still has room to run until the 70 overbought level. There was a bullish crossover on Fasto, but it's got to get back above 50. So you want to see it break above that 50 line to signal the chart is turning bullish again. And after the 3-day drop, what happened was there was a nice bounce off of support, off of the 200-day simple moving average at 180. That's the red line, and then it broke back above the 300-day simple moving average at 190. That's the blue line. And so there's a close above both of those levels, and then the share price also closed above the 100-day simple moving average at 190. And so so it was a big close above key resistance levels. The candles are back above EMA 4, and so after holding EMA 8 on the pullback, and so it's signaling more upside potential. The big level to break is going to be this closing price here on the 6th of October. It's at about 235. If it can close above that level, then that's going to signal that it wants to head higher, and you can see it run back up into the threes. We have this 340 level is going to be a big level, and then the ultimate big level is the 440 May high close here. And so yeah, and so notice that this had broken out above the descending resistance line, and it's turning this 300 day simple moving average into support. It's currently trading above all the moving averages, right in EMA 4 support higher. So that's a very bullish chart. It's got a nice another volume spike today when there was light volume on the pullback. So that's exactly what you want to see. And so if you see this breaking out above 235 tomorrow, that means it's ready to head higher. Okay, so let's look at ETRM. Okay, so yeah, this was a nice close today for ETRM. Notice it's got RSI at 62, so it's still below the 70 overbought level. You've got Fasto at 95. There was a bullish crossover on ADX, and then the key on this chart was the close above the 50-day simple moving average at 203. That's the green line, and above the bottom of the gap. Okay, so the bottom of the gap level was the top of this candle, and then the top of the gap is the bottom of this candle right here. And so if this level holds and the 50-day simple moving average turns into support, notice that there are no candles between this candle and this candle. So that makes it so there's not a ton of resistance. So if it can push higher, we're looking for a potential gap fill and up here to the near 320 level, and then the 100-day simple moving average at 339. That's the target if it can turn this 50-day simple moving average into support. If it pulls back below the 50-day simple moving average, then it's going to signal it's consolidating longer. Notice it's been on last couple months, it's been in this sideways channel. So it's trying to break out above that channel and get a new trend going. That's what today was telling us. And you've got this nice bullish volume spike. So yeah, so the chart's really heating up. Keep an eye on ETRM this week. Take a look at HTGM. Okay, so this stock closed up 10% today. It's got a nice uptrend going. It's at 63 on RSI, so it still has some room to run till overbought levels. You've got Fasto at 75. You've got bulls in control on here on ADX with the green line above the black and the red line. You got minus DI is way down here at 7.92, so that's getting a little extreme down there. What's going on is it's breaking this downtrend. Okay, so it had this really long downtrend from up here in the 7s, and it came down and it found support down here between the 160 and $2 zone, and so it traded sideways for the last month and a half, and then now it's been breaking out above the sideways channel. And notice that you've got the close here 2 weeks ago. The first week of October was above the 50-day simple moving average. That was the signal the chart was heating up. Notice that was the first close above the 50-day simple moving average since way back here in May, and so that was the clue. And then it came down. It held the middle Bollinger Band on the test, and then it closed back above the 50-day simple moving average on Thursday, and it's pushing higher today. And so today the next key level broke intraday, which is the 100-day simple moving average at 236. That's this gold line. We want to see it close above that level. If it can close above that level, then the next zone is up here between the 300-day simple moving average at 273 and then the red line here, which is the 200-day simple moving average at 294. So it looks like there's this new uptrend that started with this close back here in the first week of October above the middle Bollinger Band and the 50-day simple moving average. As long as those levels hold, the new uptrend should continue. If it drops below the 50-day simple moving average in the middle Bollinger Band, this stock will no longer be in play. So take a look at the HTGM weekly chart. So we're keeping an eye on this. It's really starting to heat up here. You can see the downtrending channel that we were just talking about. Each candle is 1 week of trading here. So it was on this multi-month downtrend, and then it found support, like I said, down here in the 160s, and then it's worked its way back up. And so this week it's testing this middle Bollinger Band. currently at 224, and so a close above the middle Bollinger Band for the week would be very bullish. That could signal the possible start of a new uptrend. Look back here in February, it closed above the middle Bollinger Band. It did pull back and test middle Bollinger Band support, which held, and then you had the huge payoff was the big run in March. So the big key here is, can it turn the middle Bollinger Band into support? If it fails to do that, then it will consolidate longer. Notice how the pink line is starting to cross the lime line to the upside. You've got EMA 4 at 205 and you got EMA 8 at 202. So that's the bullish crossover and an early reversal signal. So if the candles start riding EMA 4 higher, that's your signal that a new uptrend is starting. So the next target on this chart, if it can get above the middle Bollinger Band, is going to be this 50-week moving average at 284 and the 100-week moving average at 291. So that would be the trade between this 225 and 291. If it can turn that level into support, those will be big levels to break to the upside. So yeah, so we'll be watching HTGM to see if it can get a new uptrend going on the weekly chart. So yeah, take a look at RLOG. Okay, so this stock made the nice move on Friday, and then today it formed a spinning top, which looks like a doji here. You could call it either one. It basically, this is a doji. It didn't close at the open, so the last was 4014 and the open was 40. So that's very technical. Basically, the candle is the same whether you want to call it a spinning top or a doji. It signals indecision, and so today was a pause. It was a pause day. Yeah, on Friday it closed above the upper Bollinger Band, and today, I mean, that was actually positive in a sense that it didn't work its way right back into the bands. It's holding above the top of this previous channel, and it's holding above the 100-day simple moving average at 0.334. That is the key level to hold. You want to see this gold line turn into support, and then to the upside, and then what you want to see is you want to see the high close here in July. You want to see that hold, which is basically a 39 to 40, the 39 level, and then to the upside, you want to see a break above this high close resistance, which is at 45. And if you can get above that, then you could see a run up to the 200-day simple moving average at 55. It's got a nice uptrend going. It spent some time here turning the middle Bollinger Band into support in the sideways channel, and then it broke out to the upside. It broke above the 50-day simple moving average. Now it broke above the 100-day simple moving average, and it's working its way up to the 200-day simple moving average. Okay, so yeah, and to the downside, if it worked its way back into the bands, you've got EMA 4 at 369 as the first support level at 37. If it drops below that, you could see consolidation, and then the 100-day simple moving average at 33 would be the key level to hold. If it drops below the 100-day simple moving average, that would be a red flag. The chart's breaking down and would signal more downside risk. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.